Hey, everybody. Welcome to our FairFigure Live webinar. We've got Aaron and Felix here with us, FairFigure co-founders. Where you guys calling from today?
Yes.
I'm in New York.
I am in Miami, Florida.
Awesome.
Lucky.
We've had Aaron on our past few webinars, but Felix this is her first time joining us. How's it feel, man?
Oh, good. You know, long time listener, first time caller, as they say. Hey, everybody. I'm Felix Kamrash. Those who are not familiar with me, more familiar with my co-founder, Aaron. He's been on podcasts and other webinars before, while this whole time I've been told I have a face for radio. So this is my big debut here. How are you guys? A little bit about myself. I went to University of Miami. I started my career as a mortgage broker, and it didn't take long to realize that the real opportunity is in wholesale lending. So I shifted gears, got my company financials in order, secured several lines of credit, and began originating and funding our own deals. Guys, I'm an entrepreneur at heart, just like you. So just as things were getting serious and gaining momentum, the 2008 financial crash happened. And my business disappeared. We tried to pivot, but just couldn't sustain. We had to shut down. After that, I spent the next 5 years at JP Morgan Chase working as an underwriter and compliance officer. But as I mentioned, I always knew I was an entrepreneur at heart. I left Chase, got a job as a broker at a business lending firm. And again, I saw the same pattern. The real value was in funding the deals and not being a broker. So I partnered with an underwriter at the firm, and we left. And together we raised $9 million and turned that into $120 million worth of receivables. And then COVID hit. So we paused all new deals, concentrated strictly on collections. We recovered the full $9 million that we owed to the investors, repaid it within 6 months. And after that success, my partner decided to quit. He retired. He moved to Florida, actually. Aaron, maybe you've seen him around. I don't know. But I wasn't done. I don't know about you. I got 3 kids and a wife that's addicted to Amazon shopping. So I feel like the doorman works for her. But that's when I met Aaron and learned more about the commercial credit space. Together, we saw an opportunity to fund early stage, underserved, unbankable businesses and help them establish and build business credit. And that's how FairFigure came about. And here we are today.
Love it. Thanks.
Yeah.
Felix.
Just jumping right into it there. And we're going to definitely take advantage of a lot of your expertise today and some of the stuff we're going to cover for sure. So first off, we sent out the coupon codes to about 50 of you guys. Not about, to 50, the first 50 registrants as promised. So you would have received that in email. And if you are, you're probably munching down on pizza right now. And I'm looking here in the comments. We've got Luis from Springfield, MA. We've got Mike D. Is it working okay? Can you see us, Mike?
What's up, Mike?
Daria, Jordan Santiago, John DeRosa. Couldn't hear anything earlier either. Hopefully you guys can hear us. Drop something in the comment if you can. Yes, Mike says yes. Okay, good. All right. Well, we've got a little bit more of a formal presentation today than we did in the last couple. However, we're going to keep it low. We're going to keep it loose. If you guys have questions, as always, drop it in the comment box. And we're here to help you guys get your first 100,000 of financing, EIN only. So we talk a lot about business credit, right? And here we are. We talk a lot about business credit, but we haven't, at least in our webinars yet, gone specifically into making that connection from credit to money, to getting the funding. So that's what we're going to cover today. And before we dive into that, Aaron, Felix, I don't know who wants to take it away. We have a new feature in the product we want to let you guys know about.
I'll touch on it briefly, but like Felix has been like hands-on with the devs, like working on this thing, like literally like tapping shoulders. So we have a new feature coming out that has not existed at all anywhere in the space. And Felix, take it.
Absolutely, guys. Just like you get credit alerts for your personal credits, we're now going to be sending out alerts for your business credit from Equifax and from Dun & Bradstreet. Anytime there's activity, you will be alerted. There's going to be an icon in your top right corner. Well, it's already there. When you get approved for your lift, or when you made a payment or any updates, it's currently being used for that. But going forward, probably in the next week or so, it will be live, where you'll be getting alerts for your Dun & Bradstreet and for your Equifax files. So we're very excited. Nobody is doing it. Our job here is to help you monitor and build credit. And how can you monitor if you don't know what's going on in there? So as soon as there's an alert, you guys are going to be notified, and immediately you can attack whether it's a problem or an issue, or if it's a good thing. You're going to be in the know every time.
Yeah, man, it's really, really cool. Real-time alerts and business credit does not exist until now. You've always had to wait at least a month for the update. You guys have all heard it. You talk to your net 30 vendors. I reported. You have to wait 30 days, and you have to wait 60 days, wait 90 days. You guys all know the song and the dance. And now it's okay, they reported it. This is when it hit. It hits your phone right now, and it shows up right now. We're super, super excited about this feature. Felix and I are on the road next week for the SBFE conference in Nashville, and we're going to go meet with Dun & Bradstreet, Equifax, Sprint, and SBFE, and we're rolling out this feature, and we're super, super excited about this, and no one else is doing this right now, so we're super, super hyped for this.
Yeah, absolutely.
It's exciting.
Thanks,
guys. So without further ado,
I didn't see this. This is good.
Show me the money. So
Show me the money,
I actually
baby.
just saw this movie within the past year for the first time.
More like, give me the loot.
So, all right. The steps that I've got here, 100K in financing, how to get to your first 100K in financing. I think the first step is you got to take stock of what you have. So this is the kind of the things we'll talk about. And so small business lenders look at a lot of things. You've got industry, business entity, time of business, revenue, assets, personal credit. And interestingly, business credit's last on the list because most small business owners don't have it. So I wanted to open it up to you guys, Aaron and Felix. What you guys have lended? You worked with lenders. You've got lending. What of these elements would you call out are things that people need to pay attention to when they're getting their first 100K in funding?
Let me take
You want to go ahead?
Yeah. So some context here, Felix and I are co-founders of FairFigure, and it's fintech, and we're doing this really cool thing. We have 80,000 business on our platform. It's just amazing, right? But at our core, Felix and I are also small business owners. We pride FairFigure. We've taken no venture capital money. We're a small business. We're a team of 10. You guys look at us like a fintech, but we're also in the trenches just like you, right? It's we understand the same dilemmas and problems that you've had, and we've also had the same businesses you guys have had as well, right? So I started off I did Airbnb property management. I had 3 or 4 Airbnbs. I understand what it means. Hey, I need a new sofa. My Amex is maxed out. What does that mean? How do I get capital? We understand that. So I think the view that we have from here is very, very cool, because Felix and I are also underwriting and writing checks for a lot of you guys. We're funding you guys, but also we've been on the other side of the table too, where we were asking for money, and we know what it means to be a small business owner. So I think the view that we have here is gonna be very cool.
Absolutely. And just to touch on something here. Negative days, guys, negative days. That's what's going to kill you the most. You can have the most perfect scenario, but if you have negative days in your account, you got to stay consecutive. And I mean consecutively, no negative days, consecutive revenue, unless your revenues keep going up consecutively, that's great. But if it's consecutively going up and then 1 or 2 months it's going down, very bad look. So don't be so gung-ho as to try to show as much income as possible, as opposed to maintaining that money in your account.
Yeah, man, totally, 100%.
So just so that everybody understands what you mean, Felix, before we go on, to be clear, what you mean is never let your checking account balance go below zero, right?
It should never be lower than $100. Just
Never lower than 100. Okay.
just generally speaking. I mean, you're running a business, something happens. What are you gonna $3 in the bank account? What are you gonna do with that? You can't even put a gallon of gas in your car to get somewhere if there's an emergency.
For sure.
So
Yeah,
it's
and
very important to budget this out. We also have an accounting tool that's free to our premium members. They're free to use that. Help you stay, accounted. So you can be accounted for what's the money in the bank, where's it going, how's it going, how are you utilizing it? There's a lot of cool tools for that, and it's already free. If you're paying for premium, you already have it, so you might as well use it. If it's free, it's for me. It's something it's my motto. I like it. I'm sticking to it.
And just to stick on this and clarify a little bit more, I know from conversations I've had with you guys, if someone's, you look past, I think it was at 90 days, is it?
Yeah.
You look at their past 90 days of their bank checking account, business checking account, and if it goes zero for any one of those days, that's an automatic decline of the application.
Us knowing the real struggles of the real business owners, because we've all been there. I mean, we talk a tough game now because we know exactly what we want, but we've been there, guys. We know what they do not want, and we can go up to 1 to 2 negative days per month, but don't make it consecutive. If you have one negative day every single month and you're doing 10, 15,000 a month, that's fine. The underwriting system is going to overlook that. But if you're doing just the minimum, $2,500 per month, which is what it takes to qualify with us, and you have 1 or 2 negative days every month, chances are you're not going to be able to afford a $50 payment or a $90 payment consecutively, because when you fund with Lyft and you're making back the payments consecutively, that's what we're training here. That's what we're building. That's what we are reporting, your consecutive on-time payment history. So when we give you the money and then you miss a week or you miss time or this or that, that'll catch up with you. You got to drop those habits, and we're here to help.
Yeah, I think too, like, to resonate on that, it's like we're here as like your college academy, right? So like you guys might have been to like business school, like whatever, but like right here, it's like, okay, like we're not gonna lie to you and tell you some BS and say, hey, do A, B, C, you'll get $100,000 EIN funded, no personal guarantee. Like, we're not gonna lie to you. We're gonna teach you how to do it. It's like, okay, like come into our program right now. We're gonna fund you $500. If you don't qualify it, we'll tell you why you don't qualify. You don't have a website. You're negative 2 days. Whatever the reason would be, come fix that reason. We'll tell you the reason. Come reapply in 15 days, and we'll walk you through it. The reason is not because we want to be hard on you, because we know that if you're applying for $500, you're going to pay for it, right? The reason we do that is because our whole business model is graduating you to those bigger loans, right? We want to get you that 50,000. We want to get you that 100,000. But if you don't follow these ABC steps to get 500, how do you expect to get 500 and then not get 50,000, right? So we're walking through the steps, and like these declines, like we give you the opportunity. There's no personal credit check. There's no hard pull. Fix the reason, we'll tell you the reason, and then come reapply, and then we'll walk you through the system. And like that's the whole thing. Like we're coaching you through this whole system.
Yeah, and the best part, we can get to this 100,000 all through our marketplace using FairFigure and the vendors in our marketplace, which we will get to towards the end when we show it to you what you guys should do, necessary steps. And you're here. You don't have to go anywhere.
And Felix, when you and I were talking earlier, I know you were calling out a few specific things here, like, if you're a sole proprietor as opposed to an LLC or something like that.
So here's another thing. Yeah, Garrett, thanks for bringing it up. Guys, all you sole props, you got to stop. You're not an individual and you're not a company. You're literally in the middle. There's no reason. Incorporate. It'll cost you $600, maybe cheaper. Ask your accountant. I'm not sure how much it is. Somewhere between $400 and $700, probably at the very most. You need an EIN number. There's so much tax code that's in your favor when you're an LLC versus a sole prop. Because you're a sole prop, what do you get? A Schedule C? No, you need to get a 1099. You want to file a LLC like a 1065 or a 1065S, so you can write off your phone bill, write off your gas, write off if you're owner operator and you use a room in your house, you can write that off as part of your rent for your business.
25% of the house.
25% of the house. So if your mortgage is $2,000, you can write off $500 as an expense for your business, and that's going to come off the top. So if you make $100,000 at the end of the year, well, guess what? If you're a sole prop, you're going to have to pay taxes on that $100,000. Or if you're an LLC, you made the same $100,000, but now you're writing everything off: your phone, your travel expenses, what your supplies, depends on what your industry is, and it cost you $40,000. So now you're going to pay taxes not on $100,000, but on -40 on $60,000. So that will definitely help your bottom line. And for the bigger 100,000 fundings, it's not going to happen with sole props. They all require EINs, LLCs, or corps. So do yourself this favor. You want to be a corp. You do not want to be a sole prop, and that's it. Just a quick thing before we move on to the next slide. One of our biggest credit bureaus that we work with, that most of you that know, is Credit Safe. And guess what? For Credit Safe, you need to be a documented sole prop for a minimum period of 15 months. That's 15 before they will create a profile for you and make a report for you with Credit Safe. So just keep that in mind. LLC, a lot of you know. Some of you opened 2 weeks ago. 2 weeks later, you already have a Credit Safe profile through FairFigure. And now we're reporting. And if you're premium, now you have a trade line going. And this is how you start. But we can get more to that later. Why don't we just go through the rest of these slides? Some of y'all probably getting cold already.
And one thing I think is worth calling out to before we move on is, Felix, you were mentioning to me earlier, because I've got time in business. That's the third thing. Some of our
so time in business,
even in our marketplace. Hold on, let me say, some of our 2 years or more is a typical thing you'll see in the industry. But you had mentioned to me some of these lenders actually will accept less. So that's really interesting to know.
Yeah. So FairFigure is as least as possible. So 2,500 in revenue. As long as they have 3 months of bank statements, of business bank statements, we will underwrite your file. So theoretically, 4 or 5 months in business, as long as you have those 3 months, you'll get approved. The big boy lenders, they want 2 years. We'll get to that later on. But there's other vendors in our marketplace, such as Eurus. They need minimum 6 months in business. Again, as long as you can.
Felix, that's a next week's secret.
So as long as you have a business bank account with 3 months of revenue, you are fundable. It will not be cheap. I can promise you that, but it's available now. So if you really need that money through one of those funders, if you're a pizza shop and your oven broke and you need $4,000 or $5,000 within 12 hours or less, this is somebody that's going to help you. But you can't take on money that if you don't have a clientele to repay back.
100%.
So make sure your business has money, has revenue, so you can take on the debt, you can pay it back, and demonstrate good payment history.
Thank you. And one of the things I like to say is a quote of me: "You don't need everything to get financing, but you can't have nothing." So, you'll see people, maybe if you were saying earlier, Felix, if you have 2 or 3 of these things, that's fine. You don't need to have perfect personal credit, perfect business credit. amazing revenue, 10 years in business, all these things, but you can't have no money and no credit and no time in business. So if you can give us something to work with, and we're going to go through a number of examples today, we can help you guys. We'll find something that can work, that you can work with.
Absolutely, but
Aaron's snapping a picture there.
I got a picture. My mom texted me that she wanted to see what I was up to. So
it all starts with revenue. Garrett is right. It's revenue, it's personal credit, and it's business credit. But you only need 2 out of the 3. So if you have bad personal credit, don't worry. You could take what, as long as your business is profitable or making money, generating revenue, and you have business credit somewhat okay, you will be approved. Somebody will give you money. But don't expect the best terms.
Well said. So, if we take stock of what you have, if you have good personal credit, business credit cards are an option, even with very little time in business or no time in business. Personal line of credit, equipment financing, auto loans, credit card stacking is something that we see a lot of people in our industry saying. Aaron, did you want to jump in on that?
No, keep going. I love the stacking.
Yeah. I mean, I remember this is like 15 years ago, first time I heard of this. Some guy's like, hey, man, I can get you $150,000 in lines of credit by the end of the month, and guaranteed. Let me check your credit. And I was like, what? And it sounded like magic. But when I learned how it worked, you go, oh, well, basically you get you just sign up. If you have good personal credit, you sign up for a bunch of business credit cards on the same day. So your inquiries haven't stacked up yet. And I mean, business credit cards are more liberal with the credit lines they give you. I met a guy once, he was flipping mobile homes. He had 30 credit cards. Okay. And he's had it in a spreadsheet, and that's how he funded his business. Probably not the best way of doing it, but that's what worked for him. And I mean, if you get $5,000 or $10,000 credit line, even if you're not making much money, easy. And especially if you're getting that 0% intra APR, that could stack up for something very nice. Any thoughts on this before we're moving, guys?
There's like a few ways to go about it, right? So like I've seen stacking too with like hospitality, right? So like I know a few guys in here are doing like Airbnb, like short-term rental arbitrage, right? And like, how do you get to that point where you can have multiple leases and lease out an Airbnb? And I've seen people like, okay, like QuickBooks, you could invoice, right? So like you place an invoice for someone, and then you collect it, and then you float that invoice to buy the Airbnb. In my opinion, just like 30 years of like business ownership, like if you guys are taking shortcuts, it's gonna bite you in the ass. That's just what it is. It's like, yes, like we need to be prudent, like what we're doing, and we need to be smart, like the way we move. But like when you take these shortcuts, like it's not like a real shortcut. It's gonna come bite you, because like you could leverage like your cash flow, how it's coming in, but you need to be able to pay those bills at the end, right? And I was talking to Felix and Garrett about this when we first started this webinar. I was like, okay, like who are we talking to? Like, are we talking to the business owner, the barbershop, the truck driver, the hair salon, the pizzeria, whoever who actually has a business and who actually wants to start a business? Or are we talking to people that want to start a business just to raise money and not pay for it? And like, we don't want to talk to the people that just want to start a business and not pay for it. Like, we want to talk to the actual business owner. So it's like, okay, like how do we take this knowledge that we have and apply it to an actual business owner? Right. So I think like to summarize that whole thing is like, don't bite off more than you could chew. And like, just because you can doesn't mean you should. Right. So just because you finagled your way through YouTube and TikTok and maybe FairFigure or NAV or whatever, and you got a funding for $100,000, but now your weekly payments are $5,000 a week, and you know in 3 weeks, 4 weeks, 5 weeks you're going to default, maybe you shouldn't take that long-term consequences on that. So I think with business credit and funding, it's very important to bite off as much as you could chew. And that comes to like your net 30 accounts, right? So it's like, okay, like we had someone last week, actually 2 weeks ago, Garrett, and someone's like, should I take the max amount in net 30s I could get? It's like, no, you shouldn't. You should take the max amount that you actually need and you could actually afford, because if you can't afford it and you can't pay for it, they're going to report you negative, right? So it's like, what do you actually need? Do you need cardboard boxes? If you don't need it, cool, like don't buy that. If you need hats, cool, buy it. If you don't need that, don't buy that. Like the business credit realm is not about like it's not like personal credit where it's like, I got this trade line for $5,000, I'm gonna max it out and like build my credit. That's not how business credit works. It works on payment performance and speed and time, right? So after 4 months, if you spent $1,000 at Quill and you paid off on time for 4 months, that's way more important than maxing out $5,000, paying $5,000 the next month defaulting.
Felix, did you have anything you wanted to add on that?
No, Aaron's absolutely right. You're only hurting yourself. Don't take more than you need. By the way, guys, everybody in our marketplace, these are all our partners. So when it comes to card stacking, it's totally okay because they do know the product that we are offering and it's okay. But be responsible, which is exactly what Aaron is saying. Just be responsible. Just because you qualify for $1 million and you only need 5,000, take the 5,000. That's it. And when you need more, you go back for more. All right. Next slide.
Sorry for my rant, guys.
No, it's all good. Yeah, borrow responsibly. So another example of quick path to 100,000 equipment financing. When you guys were mentioning, hey, your pizza breaks, you need a new oven. I don't know why a bulldozer came to mind for me. I mean, I think 10 to 20% down is normal for equipment financing, but you could have 0% down even if your credit's good. So because it's it's an asset-backed financing option, you can get a lot of money here.
I can speak to this personally, actually, and I know Felix could jump in too. Like equipment financing is a little bit different than like cash advance and like short-term funding. One of my very, very best friends back in New York, he owns an onion farm, right? And he harvests and like sells onions to Chipotle and Walmart, right? So it's like it's a family business. Like I talked to him, like, how do you guys buy these tractors? And like this tractor that you showed right here, Garrett, that one right there, it's like close to $100,000, right? And like the farmers like don't have $100,000. So there's bureaus that are specific to equipment financing, right? So DNB specifically for equipment financing. So trucking, if you guys are in here, heavy machinery like bulldozers, stuff like that is very, very aligned with DNB. Where if you have a business that's aligned with like, I don't know, you need a Sprinter van, you need like commercial trucking, stuff like that. I think it's closer aligned with Experian Equifax. Felix, what do you think?
I think so too. And for those of you who are looking for equipment financing, we have a funder in our marketplace called Capitus, and that's who I would recommend for equipment financing. They're really good. They work with a network of other equipment financing companies. A lot of doctors use them for either x-ray machines or like dentists for a lot of equipment. And then such as farming as well here and other tools for workshops. So if you are looking for that, I would suggest from our marketplace, it would be Capitus to go to for that.
And then also, guys, too, I see some questions here in the chat. We're fielding them. So like after this presentation, we're going to address them. So I see some really good questions over here from like Alex and John and El.
Yeah.
So another path to 100, if you own a home and you have some equity in it, there's a few different options. You can get a home equity line of credit, a HELOC. You can refinance to pull out the equity or a second mortgage. Any of those are options that work well. Felix, I know you have a mortgage background. Any thoughts on that?
I have mortgage background. I know a lot of landlords who are equity rich and cash poor. and they're cash poor and they don't qualify because they have terrible personal credit. And for consumer, it's a little different. You're not going to get a good deal. So what does that mean? You can't go to you can't go to Chase or Wells Fargo if you have bad credit. So you have to go to a subprime lender. A subprime lender is going to cost almost double what prime would pay. So with that said, that same landlord whose rent roll is $5,000 and his current expense is $2,000, he's making that $2,000. But because he has poor credit, for him to refinance through a subprime lender, his new mortgage payment is going to be $4,000 and his rent roll is $4,000. He's now minus $2,000 that he was living off or counting on. So this goes back, same thing with business credit. You know, if you have good business credit, you're going to get better terms. If you do not have business credit, then you need to have good personal credit. And that's what it really comes down to.
Yeah, man, I resonate with that. And like, we didn't like really discuss this prior. So for context, like Felix and I are just like going back and forth. We didn't like pre-plan this conversation, which is cool because like I get to hear like his perspective, like my perspective too. And like the second I saw the slide, like I've never seen this slide before. I saw a HELOC and I was like, no, like do not leverage your home on your business. Like your job is to build your business fundamentals, and like we're not here to teach you business fundamentals. Like you guys can go to community college, there's online courses. Like your job is to build your business to make money, right? And we're here to help you earn money. But to leverage your house for money to build your business, I would never ever recommend that.
That's right.
Again, borrow responsibly. I feel like we're a public service commercial now.
Yeah, we're like the opposite of like what you see on TV. So you see like it's like sell your house for your business. Like no, don't do
that.
So if you have good personal credit and business revenue, you can get bigger business credit card lines than if you're just your business is new. Business lines of credit are on the table. Term loans, which are kind of the OG of the business credit world, and even SBA loans. Ideally, those are the things you want to grow into. If you just have business revenue with no credit, cash flow financing loans and merchant cash advances are on the table, even though there's a higher cost of financing. I know you guys both have a lot of experience with those. Maybe Felix, any insights on that?
Yeah, absolutely. Merchant cash advances, they're great. The money is available right now, but super expensive. So if you do not need the money, you do not get a merchant cash advance. That should be the bottom line. A lot of times you might not qualify for anything better than a merchant cash advance, and you really do need the money, and you can afford it, even though it's expensive and you don't want to pay the higher premium. But if you got to do what you got to do, then I would suggest you go with it. But the good thing about a merchant cash advance, I'll tell you the real reason why they are expensive. EIN-only, no personal guarantee, no pledge of collateral, and no assets, no pledge of assets either. That's it. It's as high risk as it gets. The only thing that you do sign, it's not a personal guarantee. It's called a personal guarantee of performance, where you're signing off saying, yes, I personally guarantee I will continue to run this business as I have been during the time leading up to me presenting this file for you for underwriting when I apply for the capital. So as long as you plan to run the business as you have, because these are underwriters, they look at your bank statements, they look at your revenue. And what is a merchant cash advance? They are purchasing your future receivables at a discount today. So what does that mean? They purchase $10,000 of your receivables for $7,000 today. They wire you $7,000 to your bank account. And let's say over the next 100 days, they're going to collect I don't know what the number is, $500 a day. No, it's probably way less than that. $200 a day, whatever that number comes out to. And that's going to be it. Another good thing about a cash advance, the payback amount, that $10,000, can never go higher. Meaning it's a set payback amount. Picture yourself back in elementary school, junior high school, somewhere high school, where a friend in your lunchroom, it's Tuesday, says, hey, can I borrow $3? I'm going to pay you back $5 on Friday when I get my allowance. Well, Friday comes and goes, 2 Fridays pass by, still no money, but he still owes you $5, your friend. You're not counting interest because you guys agreed on $5. It could be a month later, still owes you $5. Same thing with a cash advance. Another thing, a caveat, small caveat in cash advance is they base the payback, your payments on a specified percentage. So what does that mean? As an example, if your payment is $100 per day and you were showing a revenue of $10,000 per month, as an example, but now a month later, let's say you got money in January, they were looking at your December. Now it's February 1st, January finished, and in January you didn't do 10,000, you only did 8,000. So what you can do, you could pick up the phone or email the funder, say, hey, my revenue was lower. I need you to it's called, doesn't matter what it's called, recalculation, something like that. But it's first page of every merchant contract where it says they have to by law recalculate. So if your revenue dropped from 10,000 to 8,000, 20%, then your all payments in February are going to be 20% lower. So you're not going to be subject to the $100. You're going to be paying only $80. But catch 22. February ends now, it's March. Since you contacted them to lower the payments, they will now contact you in March to see how your February was. So you have to show them how was your February. And guess what? If your February was even lower, they will reduce the payment even lower. But if your revenue goes up now to 12,000, the following month's payments are going to be increased by the 20%. So it'll be $120 per day. Again, until the original payback amount of 10,000 is repaid. So it could take 3 months. It could take 8 months. It depends on your revenue because they're buying a specified percentage of your daily revenue, whatever comes in. And that's how they come up with that number.
Guys, I would ask for a replay of this video because when Felix talks about MCA, I would listen. This guy was co-founder of a company. They originated close to $250 million in merchant cash advance funding. So he knows what he's talking about. So let's do a replay on that for sure.
Absolutely. All right.
Well,
what do we got?
Thanks, Felix.
My pleasure.
Appreciate that.
We've got
where'd you get that one from?
a GQ picture of Mr. Kamrash here.
Aaron, is this what you sent to him?
That's a good one.
Jeez, we're having fun here tonight.
I actually did this with AI without Felix's prior knowledge.
Okay,
So-
we'll
So
take
if you
it.
send it to your wife, she'll like that.
Well,
The
yeah,
question-
my hair was still black back then.
The question is, should you use your personal credit or not when you're getting financing? Because maybe your business credit isn't where you want it to be. So that's something you have to figure out. Aaron, Felix, what do you guys think?
I'll be honest with you guys.
You got
I'm in this. One example of me. Before FairFigure, for one of my cards, I got an Amex. I qualified for an American Express. It was a platinum card. It had my business name on it. It was a business platinum card. But guess what? I had to provide my social security number, and I personally guaranteed it. That's the only way they would have gave me that particular card. Now, there might be other cards out there that are EIN-only that do not require this. But everybody wants an Amex. You're going to get the best deals. You're going to get the best benefits. You're going to get the best rewards. They want the best credit. Versus the other guys are going to give you a regular charge card, high APR, no cash back, no rewards, no points, and that's it. So personal credit is important.
I can speak too with like the providing a social thing, because any lender, any funder, any credit card, any charge card, any legitimate company that's going to give you money has to collect your social security number. And it's not because they're doing a hard pull on your credit. It's not because they're reporting to you. It's because in the United States, we have these laws that require that we collect this information, right? It's called KYC, which is know your customer, KYB, know your business, and then AML, anti-money laundering, right? So even at FairFigure, like we don't report to personal, we have to collect your social security number. So we need to make sure that you're not a terrorist or a money launderer, right? And it's just industry standard. Company is not collecting your social security number, I wouldn't trust them because they're not compliant with the United States law. Like you have to collect social security numbers. I would read the fine print and reach out to customer support if they're doing a hard pull or a soft pull. That's in your purview to go check that. Draper Anthony's saying right here, EIN-only cards. Yeah, EIN-only reporting, but as a U.S. citizen and business owner, you have to provide your social security number. There's no way around that.
We collect it, but we don't use it to run your credit. That's
no,
it.
we collect it for AML, which is anti-money laundering, and KYC, know your customer, to make sure that you're not a terrorist or a criminal, and that's it. And the law says we have to do that.
Yeah,
right.
Important distinction, huh?
And it's not a background
provide your
check,
social security number, but EIN-only vendors are still, we say EIN-only, but really they're just not going to check your credit. Yeah, good distinction.
Sure.
All right, we'll move on from Mr. Handsome there. So I think the main thing we want to emphasize is, start where you are and build your, start with whatever business credit you can qualify for and then build up. In the beginning, that's net 30 accounts, trade accounts. We had webinars with some of our net 30 friends. They're all in our marketplace. Once you get with those easy qualify ones, you move on and you get some payments under your belt. You move on to ones that are a little more difficult to qualify for. Once you got those under your belt, you move on to even harder ones. And so, and I think realistically, for most of you guys, you could perhaps get your $100,000 loan for any of these sources we've mentioned in one fell swoop. But I think for most small business owners, it's a little here, it's a little there. Start with what you can get, even if it's $500 with FairFigure Lift, $500 with Fair Net 30 account, and then you build. You build. And then I think an important thing too is you build relationships with your vendors, you build relationships with your lenders. So maybe even like I have an Amex credit card, a business credit card. They started off giving me a $10,000 line of credit. A few years later, now it's a $60,000 line of credit. That's how that works. You manage your credit responsibly, and it will grow over time. You guys, Aaron and Felix have built relationships with some great lenders in our marketplace. We've got a few logos here. What can you guys tell us about good starting places?
Yeah, Aaron, I don't mind. You don't mind if I jump in?
Yeah, go for it.
Yeah, is this one of the last slides already?
Yeah, we're getting towards the end.
All right, guys.
His pizza's coming, so.
No, this is the time we talk about how you get $100,000.
Okay, cool. All right. Continue.
Right. It's not difficult. It's not the simplest, but it's not difficult at all. You register for a business, LLC. As I mentioned before, no sole props. Your sole props are just not taken as serious. That's it. For one simple reason. I'll give you most logical explanation. A sole prop is an owner operator. God forbid you get hit by a bus, that's it. LLC is the EIN. If God forbid something happens to you, it's still a corporation. There still might have the assets. Somebody else might take over. You can hire additional people. You could do so much more with it. Business bank account. You form an LLC. The very first thing you do, you open up a business bank account. We have Mercury logo right in here. They're also in our marketplace. They'll open you up a business bank account for free, instantly. Very easy. Start using that account. Have 3 months of bank activity on there, at least $2,500 per month. No negative days. Always helps if you have online presence, website, social media. The best is to have a company email, like at FairFigure, at Eurus, at Regions, at Mercury. Go to GoDaddy, $10, whatever it costs. Just get a website for $10. I think we have an AI building website for like $50 or $60 in our marketplace, where in 90 seconds it'll build you a website. Don't remember the name of it, but you guys can find it. So now you have a company, you have a website, you have a bank account, you're generating revenue, you have 3 months of revenue, you apply for FairFigure Lift. We start you up with $500, and that's your first trade line. Unless you're also a premium subscriber, then you will have 2 trade lines with us. Once you have these trade lines, you can apply over 6 months in business. You'll be able to qualify with Eurus for higher funding amounts. They will go up to $50,000 if you're less than 12 months in business, which is also very good. Once you're over a year in business, you can reach out to companies like Capitus or Annuity, but they do prefer 2 years. But there's also the exception. The exception to the rule is
I think we're losing Felix's connection there. So I'm just going to jump in. Aaron is AWOL as well.
Sorry.
So I'll just jump into the next slide here. And actually, I'm going to stop sharing right now because I want to share with you guys. I'm going to drop something in the comments. We've got loans or lenders in the marketplace. I'm going to drop that in the comment right now. And all these ones we just went over, Eurus, Capitus, Annuity, Regions, they're all there. Even if with a free account, you guys can apply with them. And then also if you poke around in the marketplace, we also have our vendors, and under business services, I believe, is where you can find Mercury. Aaron, were you going to jump in with something?
I resonate with everything that Felix said. I completely agree. I see some comments here on EIN. That's a very good question that we're working on, but I don't have good answers on that right now. But love that question,
Aaron. We actually were for this webinar. We were actually able to do get an expert banker from Wall Street to weigh in with a really expert quote, and here it is. His name is Aaron Velasquez. And what he told us was, start small and grow over time.
That's good. I love that photo. Thank you.
Aaron hasn't seen this before, you guys. A nice little AI picture of you there.
I haven't seen anything. I flew in and then I opened up this webinar, but thank you, Garrett.
Yes. I thought you'd get a kick out of that one. So we've already talked about a lot of this stuff. I'll drop one little tip. I learned this from a credit expert who actually founded one of the biggest, I think the biggest credit repair company in the US. And he explained that use less than 30, both for business and personal, use less than 30% of your credit lines. 28% was the hyper-specific number he gave. If you can avoid using most of your credit limit, do that. And the banks will reward you with higher credit limits over time. And it's one of these paradoxes I think is a little bit messed up of the way banks work. It's like, hey, we're going to give you credit, but then we don't want you to use most of it.
Yeah. So with personal credit, yes, but it's interesting with business credit, that doesn't really exist, right? So on your personal credit report, like you open like a Capital One, like an Amex, right? And you spent $100 and your total credit limit is 10,000. In business credit, like these net 30 vendors will pretend they give you the maximum credit limit, but that doesn't actually matter. What's reported to Equifax, Experian, DNB, SBFE is the actual amount that you spent, right? So if you had an invoice for $2,000, that's what's reported. Your total credit limit that they advertise, it doesn't matter because it's not taken to their data points. So you can have a $20,000 credit line and you only spent $2,000. The only data that actually appears and affects your credit report is how much you actually spent and how much you actually paid. So it's interesting because like in personal credit, like I have like, I don't know, like a Chase account, $20,000 limit. I spent $5,000. I know I need to keep it less than 30%. With business credit, it's very different. It really is like, what is your max invoice amount? So I bought $2,000 worth of hats or mugs or whatever, and then I paid it down this much, and I'm using this much of my balance, and I'm exercising this over the course of 3 months.
Okay. Thank you. Yeah, it's good clarification. Felix, you're back from the dead.
Yeah, I'm not sure what happened. Let me just finish what I was talking about there real quick.
Sure.
If you want to take me back to that slide. All right, guys. So yeah, first year in business, you can always go to Eurus Funding. After that, you can go to Capitus or Annuity. Capitus and Annuity both check business credit, and they both check personal credit. The difference is Capitus will go down to like a 550 on a personal credit. It'll still be EIN deal, but EIN-only funding. Everybody's here EIN-only funding, but they require good personal credit for the business owner as well. If you're over 2 years and you go to Capitus, you're going to have much better terms. Annuity is kind of like Capitus, but they work with the SBA. So they require a minimum of a 620 FICO. You're going to get monthly terms with them. You're going to get the Rolls Royce of the deals from Annuity. But you got to have 2 years in business. You got to have great business credit. And you got to have okay to good personal credit.
They're doing SBA, right?
Annuity pulls the SBFE report, which is an Equifax product, which is the conference that Aaron and I are going next week in Nashville. So even though SBFE is not a physical report that you and I can check, but as long as we report, they show it to the SBA because that's what the SBA uses.
Yeah.
Cool.
Regions Bank, by the way, we have a lot of contractors, home remodelers here. If you don't know yet, if you're not familiar with the marketplace, Regions Bank, contractor loans up to 100,000.
Awesome.
Yeah.
Well, Felix, I feel like you're giving us the inside knowledge here. Just like look peeking behind the curtain.
Well, it's recommended that you have at least 5 active business trade lines at all time. You could get one with FairFigure Premium. You could get one with Lift, but that's only 2. Eurus Funding reports, Fair reports as well. Annuity, I believe, also reports. So, but we have others, CEO Creative. There's plenty of other vendors in our marketplace who do net 30 reporting, so you can have your 5 trade lines. I'm done.
Awesome. Yeah, that's good. That's good. We're trying to lay it all out here for you guys. So I know we've got there he is again, Mr. Wall Street. We've got a coupon code for you guys. We'd love for you, anyone who hasn't joined FairFigure Premium yet, 15% off the monthly subscription with coupon code PIZZA. Okay, I'm gonna write that down here. So please join FairFigure Premium. You just go to the website, and we'd love to have you as a paying customer. And I know you guys have been blowing up the comment sections with some really interesting questions. Gigi, did you want to weigh in on who we wanted to answer first? I didn't see anything in our private chat. If not, we can just start with Aaron. Did you have somebody you wanted to start with?
There's so many here that are good questions. Scroll up. Pardon, guys. Rebuild.
I thought John DeRosa's was kind of interesting. If you guys don't mind.
Can you hear
Gigi's
me?
hopping on. Yep. Hello.
Gigi.
Hello.
Hi. Okay. So Jana asked, what point does the interest or payback go lower?
Interesting question.
I could answer that.
Yeah, Felix, take this one, please. Yeah.
It's an easy one. You build the relationship with the funder, with the lender. You build the relationship. You build history. The first loan is probably going to be your most expensive one. It should get easier and better from that point on. But good credit, and again, goes back to revenue. Keep those healthy bank accounts, guys. Keep them healthy. Keep them beefed up. But it can also work against you. I'm going to tell you a little. If you're looking for $10,000, let's say you put, I'm looking for $10,000, but you have $25,000 in your account every single day, that's going to turn the funder off. Be like, well, what do you need my $10,000 for if you have 25 in the bank?
Wait, why is that?
Because it's going to say, what do you need this money for if you already have money? And they know that their money is expensive. It should be the people who, are struggling. But here they might think the opposite, might think, oh, it's a scam. They're not going to pay me back. They have all this money. What do they need? It's only 10,000, but they have 25 for the last 60 days in that same account, not touched. What do they need this extra 10,000 for? What is the emergency? What is the hurry?
Interesting. Yeah. I didn't think about that.
Yeah. However, but if you're going to go to annuity for the SBA, they're going to look at it a little bit differently, and they're going to appreciate it. So again, every funder has their own risk appetite and their own underwriting criteria. There is no plain vanilla here. Everybody has their own underwriting box, and it's where you fit into that box. And everybody in our marketplace who we handpicked, and we add and remove all the time. We remove as well if it don't converse well with our clients. If it doesn't fit our clients' needs, then we don't need them. So we have a risk appetite for every one of our clients in FairFigure, which is very, very good. From the lowest of the subprime to the best of the premiums. So we have them all.
Cool.
Okay. Another question here from Kiana. Does FairFigure report to Dun & Bradstreet, or should she pay them and report herself?
Can you pay them and report yourself?
I'll take it here.
Yeah, please.
So we do not report to Dun & Bradstreet, but for a reason, right? So everything, I don't want to get too woo on this FairFigure thing, but we're very intentional about what we're doing, right? So everything that we're doing is to try to build your success in getting funding. So with Dun & Bradstreet specifically, they're very good partners of us, and we do pull data from them. So we think it's important to have your DUNS number, to have your trades unreported. But most of our clients, 99% of them, are not farmers, right? So with Dun & Bradstreet, their core industry is going to be farming and heavy machinery equipment. So unless you're shipping containers over to overseas or you're a farmer, that trade data is not that important as having a DUNS number. So it's important to have your DUNS number. It's important to have some activity on that. But for you to actually have trade data reported, it's not that important for your company. And the companies typically that say they're going to report to DNB, unless it's a farming equipment like John Deere or a shipping container company, they're probably lying, because these companies are only allowed to report to DNB, right? You're net 30 buying boxes and paper towels and hats They're going to say they report to DNB, but they don't. So we try to take a holistic approach to this, where it's like, okay, like you need to report this information, you need to monitor it. It's important that you see what is there, but unless you're in these specific industries, it's not that important that you report it. It's more important that you exist in that space.
For example, for those of you who want to, finance a car using your business EIN, and you go to like Chase Financial, they use Experian. They don't use a Dun & Bradstreet. They use Experian. And then like Chrysler Financial, I think they use Equifax.
Sure.
So just something to keep in mind. I see something came in here. I was always told to keep funds in the account, so now I don't, from LG. No, you always keep funds in your account. Just, if you have 10,000 in your account, don't ask for 5,000, ask for 100,000. Shoot for the moon and see if you land on a star or something. Inside tip.
Inside.
Who do we have next,
Okay, what do we
Gigi?
got next?
Okay. Draper asked, what if I have 80 paid acts?
What
I
was
mean,
the
that's
question?
great. If he has an
80
80 paid
paid
acts, I mean, it's great to have an 80 paid acts. That means that like you exist in the spectrum and like you're there, like the bureaus know who you are. I would check like what the other bureaus have on you. But also more importantly too, like what is your business? Like, are you profitable? Do you have customers? Do you have clients? Do you actually have a real use for this money? So we're not here to coach you how to start a company to build money to not pay, right? We're here to coach you like, hey, like you have a legitimate business and you need to raise money to add like a new shop to your barber shop. You need to add a new truck. So it's like 80 paid acts, it's very subjective as to what that means.
Okay.
Again, you're gonna go to Chase to buy a car. They're gonna look at your Experian. They're not gonna look at your Dun & Bradstreet. So that 80 doesn't hold that much water for that industry, unless you're going to get a tractor from Chase, and maybe they will check your Dun's number.
Exactly.
Yeah.
Okay, next
What's we
question
got?
from Lee. With the new alerts rolling out this week, will this auto update the credit reporting agencies?
No, it's an alert already from the credit reporting agency saying, hey, there's been a change or an update on your credit report. This is the credit bureaus letting us know, letting you know, the client, the business owner, that there's been some movement on your report.
Thank you, Felix.
Okay, Audrey is asking, how long does it take someone from your tier 2 team to get back to you on a call?
There's no phone number, Audrey.
There's no phone.
Yeah. You can.
I'm sorry.
We have 80,000 plus customers on our platform. We're a small team, like 10 plus. Like we address all chats within like 24, 48 hours tier 2. But there's no phone number.
Yeah, she doesn't.
Those of you who know Omar, he wants to rip his hair out every day because there's just so much traffic coming in. But it's a fairly small team. There's a few of them on there. But that is a good question.
Thank you.
Okay.
Let's do like maybe like 2 more. So we're approaching like, we're actually 4 minutes over. But we do like 2 more questions, I think.
Yeah, that's fine. We can answer a couple more questions.
I thought John DeRosa had an interesting question. He said, how about a 4-month-old LLC, 75K in the bank, but no revenue for another month or so? So building business
Not
credit
gonna fly.
is not possible.
Not fly. You don't have revenue. You're not a viable business at the moment. You could have raised that money, put it in the bank, and now it's just debt. The lender, whoever's going to give you the money, they don't know where that money's from. You could have borrowed it, and it's just been sitting there. By the way, another thing what a lot of lenders look at, so does FairFigure, is the number of deposits. If you're doing 1-2 deposits per month and it's like a $5,000-$10,000 deposit, even though it meets the 2,500 minimum threshold, it will still fail. Because if you're a real business and you're doing 1 deposit a month and you lose that 1 client, there goes your whole business. If you're doing 3 deposits per month, you lose that 1 client, you just lost a third of your business. That's very, very high risk. Nobody wants to see that. General rule of thumb, at least 5 deposits per month. Like real deposits, not like a refund of $13, not a refund of $13.
Yeah.
And guys, one more thing, just so you all understand for the future, there's something called true revenue. If you're transferring money from one of your accounts into this account, that does not count as revenue. That gets subtracted. It has to also be a real deposit.
Like P2P transfers, like we see people like cash apping themselves money. That's not a deposit.
It's not a deposit, but there's always an exception. For example, you could be a makeup artist, and your people will sell you every day. And then how are you going to put that money into the bank? You're going to have to send it from your Zelle that's going to have your name on it into your bank account. So on paper, it looks like, oh, this person is just, fluffing up their own bank account, making it look like there's revenue, and they're going to decline it. But we're pretty smart at FairFigure. We look at the industry, we say, oh, most likely, let's look at 3 months back. This is how they get paid. Now, if you're a truck driver, we don't expect to see Zelles. We expect to see deposits. If you have a Square account, we expect to see merchant deposits from the processor and not Zelles. So that's also something to keep in mind.
I do want to add one thing about John, though. I think he has the right mentality. Even though he may not be able to qualify for anything without revenue, the fact that he's wanting to build his business credit early, I think that's smart. He can get those, you recommended 5 trade lines earlier, Felix. He can get those 5 trade lines with the cash.
Absolutely, without the funding. Yeah.
With the money he has. Premium. And then once his revenue starts rolling in, he can have good business credit. So at that time, he can be able to get funding.
In the beginning, like time is your currency, right? So like, even though you don't have the deposits right now, you have time right now. So definitely use that to your advantage.
Absolutely. You don't have any deposits. You opened the company up last week. First thing you're going to do is you're going to go to FairFigure. You're going to sign up for a premium account. We're going to create a profile for you with already 1 credit bureau. Remember, you guys didn't exist. The EIN, the company didn't exist a week ago. Now you join us, you have a credit profile with one of the bureaus. And then that's 1 trade line. Then you go to CEO Creative in the marketplace and you print some business cards or a t-shirt for your company that you want to promote. That's a 2nd trade line. And I'm sure you can find a few other ones. And then in 3-4 months, once you have revenue, you can now apply for the FairFigure Lift product. There's going to be another trade line. And that's how you're going to start building.
Last question then, Gigi.
Keisha asked, what does the wait list mean for applying for a capital with FairFigure?
Yeah. So Felix runs the wait list, by the way.
Yeah, we get this all the time. There's a lot of influx. There's a lot of applications that come in at the same time. And the wait list is, for the most part, it's usually fast. Most likely it's same day. Sometimes it's within 20 minutes. The only time the wait list can get long is if it's after hours and we don't have instant funding, meaning it's going to come the next day anyway. So that's the only time you might see an overlaps, meaning like from one day to the next. But usually if you do it at night after 7, by 10 a.m., it's already been decisioned.
Well, cool. Well, this is our first nighttime hours webinar. I think we had a little bit of a different crowd. We got Felix in here, Gigi, so it's awesome to have everybody. Hopefully you guys are stuffed with pizza, and it's been a pleasure. And just remember, we've got that coupon code for you guys for sign up for FairFigure Premium. And if you weren't able to catch everything, don't worry, the recording is going out within the next few minutes.
Just a moment. We have Simi here. Simi is asking, are all payments for this loan daily or weekly? It depends. However, the lift is weekly only, so there's no daily. The funders that we have in our marketplace, for example, Eurus, they do weekly and daily. Capitas, they do weekly, daily, and even every 2 weeks, I believe. Nuity is the only one that's going to give you a true monthly, once a month type of payment. Okay. Last question, if possible, from Alex. What if the business has multiple revenue streams with different bank accounts? All right. We get this one all the time. I'm not even going to finish reading that one. I already know where this is going. One account, guys. All you need is one account. Make it your best account. Make sure it's a business checking account. A lot of times we see business savings accounts linked. A lot of times we see a business savings account and a business checking account. But for repayment, for underwriting purposes, you guys, I don't know how, but you select the savings account and then the system automatically declines it and then sends you an email saying, hey, you connected a personal bank account, which it doesn't know. Meaning, if it's not a business checking account, everything else to the system is a personal account because it doesn't matter. You have to do it, not just for us, but for every other lender that's out there. Any bank, any funder, any lender requires a business checking account. One account is all you need. And again, for FairFigure, all you really need is $2,500 in monthly revenue. That's $30,000 a year. One account should be enough to cover that. And the only times we see companies that have multiple accounts, they have multiple revenue streams. So just pick one that's going to cover at least $2,500 a month.
All right. That was a bonus question from Felix. Thank you.
Yeah.
All right. Well, it's been good, guys. We're going to be logging off.
Thank you so much.
Thank you, everybody. It's a pleasure.
Yes.
Until next time. Ciao.